Today is Thursday, July 23rd, and this is a post-market review for the market activities today. The Dow Industrial Average closed down 1.3%. The S&P 500 closed down 1.2%. The Nasdaq was a notable underperformer today, down about 2.3%. You are looking now at a heat map. As you can see, it's a red tsunami across the tech sector and across the board. There are a few pockets of green in regional banks, some of the consumer defensives, and the airlines. Some of the airlines we saw on the heels of American Airlines slightly beating expectations. But other than that, it was a very bad day for the stock market, including the safety trades of utilities were muted. If we look at the sector's performance, you can see that everything underperformed today. Some sectors managed to close in the green, like the financials, consumer staples, utilities. But the theme is very clear, with information technology /tech /momentum and consumer discretionary communication services leading the losses today. And by the way, we have some earnings after the bell, notably from Intel. Let's take a look at it. Intel being whacked really hard after earnings, down 8.77% as of the recording of this video. Some people ask me why did I stop shorting the airlines 2 weeks ago, and of course I've been shorting the RIPs and airlines since June. I stopped 2 weeks ago because I wanted to see Delta Airlines earnings. The story with the airlines that yes, their revenue and their business is absolutely horrible. They're losing 80% plus of revenue year over year. However, they managed to raise a lot of liquidity from government loans and bailouts, and that is keeping them afloat and covering them for this quarter. Therefore, we might be seeing a bottoming process in airlines. What you need to do is to keep an eye on the TSA checkpoint numbers. If these numbers start to curl down, that is your signal to short the airlines, because the airlines can weather the storm for 1 quarter due to the Fed loans and the bailouts, but they will not be able to weather the storm if the crisis continues for more quarters to come. For now, I'm leaving them alone. I am shorting technology instead. Speaking of my portfolio, we have some portfolio updates. Here is my portfolio starting July. Of course, I closed Netflix and I closed Wells Fargo as my shorts. Instead, I added Expedia to my shorts and I added Chevron, Fremont McMoran, and Mondelez to my longs. These trades, of course, a bearish trade against the US dollar. I'm betting against the US dollar. We're going to look at the dollar's chart when we do the charts analysis. I would not go into details in this video explaining my moves, my portfolio moves, because we have a lot to cover today. I will do that in a separate video. There are a few reasons why the market crashed today, but primarily it is the weakness in the technology sector. We saw a very sharp reversal in Apple today. I released this tweet in the morning showing that Apple's market cap exceeds the GDP of Canada. This is the ridiculousness of the level in the market that we're in, and it's a clear indication of the bubble. The sell-off in Apple, of course, was following the lead from Microsoft yesterday. And this is exactly why the market crashed today, due to investors revising and looking back at their decisions, at their holdings, and asking questions whether earnings will justify where their stocks are or not. You look at the two biggest names that reported yesterday. Tesla up 500%, more than 500% year over year. Yet when you look at the numbers, the core business actually shrank. And without the regulatory credit of $428 million, Tesla would have not been profitable this quarter. Likewise, when you look at Microsoft's earnings, last quarter, the revenue grew 15% year over year. This quarter, they grew only 13%. When you look at their biggest growth product, the Azure, the cloud product, the Azure been trending down. The growth in the Azure business been trending down, but this quarter, it really accelerated to the downside. It only grew by 47%. Now, you could say that, hey, a growth for 47% is a big deal. This is good results. You have to put it in the big picture. And when you look at the big picture, you see a downtrend in the growth of Azure. And investors, of course, looking at Microsoft stock and seeing that earnings are slowing down. They're trending down. Yes, Microsoft is an overperformer during the coronavirus crisis, but even Microsoft is slowing down. They're looking at the chart. They're looking at the valuation of Microsoft, they're asking questions, and they're coming to the conclusion that the stock should not be at this valuation giving these earnings. This is a top in Microsoft. It will only trend down from here. And of course, smart investors are hitting the sell button. They're taking their profits, they're booking their profits, and they're going away raising cash. So be careful of the avalanche of selling that's about to happen in the market. The holders of these names, the big tech name that ran really high, they're now reflecting, they're looking at Microsoft earnings, and they're saying, well, maybe we've reached the top here. Maybe we've taken things way over our heads in these stocks, and it's time to take some air off the bubble. Yesterday, of course, we talked about the exhaustion in the market. I told you that there is exhaustion. There will be exhaustion. And you're seeing that exhaustion materialize. After holding these momentum stocks for a long time, making huge profits, holders were waiting and waiting and waiting for a catalyst to push them to the upside again, waiting and waiting and waiting for newcomers in the sidelines to deploy their cash, push the stocks higher again. That didn't happen. Earnings come light, and you see that materialize in selling decisions. More selling decisions will happen because of the exhaustion. There's nowhere to deploy your cash in the market right now. They want to take their profits, book it, and wait in the sidelines, or perhaps switch it to precious metals or some other sectors that are bottoming in the market. Let's talk about some of the headlines that we saw this morning. The unemployment claims, the weekly unemployment claims came worse than expected. Up 1.4 million. We're seeing this consistent theme of over a million Americans applying for unemployment benefits and claims every week. More holes are being poked in the V-shaped recovery. And I mean, you have to be a real fool to believe in any V-shaped recovery at this point. The market will take its time, but we will realize that the V-shaped recovery in the economy is not happening and will follow suit. We have bad news from the city of Las Vegas. Las Vegas Sands, of course, reported earnings yesterday, and they were one of the most horrible earnings report that I have ever seen. Of course, I worked as a financial analyst in the Las Vegas casino industry before, so this is my territory. I know how it works. These businesses struggled a lot during the financial crisis. We were restructuring debt with the banks during the financial crisis so we can get out of the hole. The casino business thrived and only got out of the hole the last 3 to 4 years. They're finally breathing and seeing their financial numbers looking good again. What do you know? The curse of Las Vegas is a real thing. Coronavirus comes in, destroys the town, and dial a big blow way bigger than the financial crisis to the city. I really don't know if the city will survive or not. It will need federal government intervention to save it. Case in point, the Las Vegas Sands executives are saying that the city is in a world of hurt. This is a company that's supposed to be the best company on the strip, reporting less than $100 million in revenue in an entire quarter. What's going on here? Is it even worth it keeping these casinos open, given the operational costs? And across the street, Wynn Resorts is furloughing employees now. This is a very negative, grim outlook for Las Vegas. The casinos, I wouldn't invest in them at all. We're seeing a slowdown in Macau, big slowdown in Vegas. I wouldn't touch the casino stocks at all right now. More news in bankruptcy. And Taylor, the retailer, of course, filing for bankruptcy. We're seeing this theme with retailers falling one after the other in bankruptcies. We saw some earnings reports this morning. Dow Chemicals are cutting 6% of its workforce to reduce costs. This is, of course, more bad news for unemployment. What about AT&T? AT&T reported today, and they're saying over 300,000 customers just stopped paying. And we're seeing this theme across many sectors in the economy where businesses and individuals stop paying rent, they stop paying bills, they can't afford it. They don't have the money to pay their dues. And of course, the business right now have to eat that loss. AT&T is eating that loss. They can't really cut the customers off given these circumstances. How about travelers insurance? A name that was supposed to be a safety name, a yield name. Their reported earnings, they're down $854 million in losses this quarter. As of course businesses, small businesses, medium businesses, even some large businesses declare bankruptcy and go out of business, they don't need insurance anymore, and you're seeing that hit in the insurance industry. How about the airlines? We had American Airlines this morning. It's the same theme. The revenues down over 80%. In this particular case, down over 86%. The net loss is over $2 billion. Very bad numbers for American Airlines, just like the rest of the companies in the airline business. However, because the negativity and the expectations from analysts were so grim, American Airlines caught a bit today in short covering and some rotations to the airlines. And this is why I'm telling you I'm not shorting the airlines, because for right now, this could be a bottom. We need to see more information to figure out where the airlines are going. Still bearish, still negative on the airlines, but I wouldn't short them right now. I am net short in technology instead. Speaking of technology, Apple. There's a probe against Apple from consumer protection agencies across many states. This is bad news for Apple. Apple been pushed really high. And of course, we saw today Chamath Palihapitiya comes out and he says that these big tech names, Amazon, Facebook, Apple, will all have to be broken down at some point. And he's right. Why is Amazon and Jeff Bezos becoming richer, exploiting the crisis of the pandemic? Small businesses can't open, even if they're allowed to open. Customers are not going out. Who wins? Amazon. They have a monopoly over online commerce. This has to be broken down. This has to be solved. Small businesses are hurting while big giant business and a single individual is making billions and billions every day. It's not fair and it's not acceptable. We have to look at these businesses and reshape our economy in a new way post-coronavirus. Here are some really bad news about mortgage delinquencies. Look at these numbers. Mortgage delinquencies up in a crazy way, specifically in the accommodation, real estate, and the retail real estate. They increased from January from 1.5% delinquencies to last month in June to 24.3%. This is in the accommodation business. What about retail? January, it was about 3.8% of delinquencies. Last month, up to 18%. This is not good. Not good for the banks, not good for real estate, not good for the economy overall. And of course, while bankruptcies storm all over the place, businesses hurt, shareholders hurt, employees hurt, what about executives? Executives, of course, exploiting the situation, cashing in big bonuses before declaring bankruptcy. Let's move on to the chart analysis. Here's a daily chart of the SPY, the S&P 500 index. You can see that we're starting to reverse. We caught a little bit of support from the line I identified right here. We will see what will happen tomorrow, how we will close the week. The weekly close is ever so important. If we dip into the red tomorrow, it is good night, Irene. We're going to reverse, and it's the beginning of the big correction we've been anticipating. This line has been a very important line for the market, very important resistance, previous support line, and you don't really crack over these lines so easily without a catalyst. We don't have any catalyst. Remember, here is this line, the 286 identified below. The 286 line was a former resistance. We struggled to break through it. Every time we peak above it, we go and correct down. Every time we peak above it, we correct. Finally, we peaked above it, and it did act as a very good support for the market even during the crash. It acted as very good support for the market, and it acted as a resistance on our way up. Remember, We finally broke off this level. We struggled. We just loop around it over and over. We finally broke above it due to a catalyst. What was that catalyst, if you remember? It was the Phase 1 China trade deal. Once that was secured, it was the green light for the market to rally all the way. We need a catalyst here to continue the rally. What is the catalyst? The stimulus? Maybe that'll do it for a little bit, but it's not going to be enough. It's not going to be a big enough of a catalyst to do it. Fed liquidity? That's already priced in. What else? Earnings? Earnings are not coming as good. We need something. And what is that something? I can't find it. The longer we hang out without finding a catalyst, the more frustration and exhaustion that investors will find themselves in, and they will not hesitate to push the sell button and book their profits and wait to see what happens next in the market. Here is a 15 minutes chart of the SPY index. We started the day flat, struggled a little bit back and forth. It didn't take long for the big flush down to happen. And now we just consolidated at the end of the day below the line right here. We caught a little bit of support, but we couldn't hold it. And now we're consolidating below it. The rational assumption, of course, that tomorrow will be an extension of this move. We flushed down, we're consolidating, and we'll flush down again tomorrow. Similar story in the Qs. The chart looks exactly the same. Here is a daily chart of the Qs. You can see we caught a little bit of support on the 20 days moving average. We will see if that will hold tomorrow or not. The likelihood, of course, it will not hold. We'll see more selling tomorrow. The RSI is telling us that. The MACD is curling down. You look at the weekly chart. Of course, if you've been following me, you know my philosophy that every time a chart makes a higher high on the chart, yet makes a lower low in the RSI from a weekly perspective, that is always a recipe for a correction. We're also way extended over the 20 weeks moving average. We need to go down and visit the 20 weeks moving average somehow. Here is a 15 minutes chart of Apple, which led the Qs to the downside. It didn't catch a break at all from the beginning. Opening bell, it's a flush down all the way till the closing bell. Very painful day for Apple stock. Let's contrast that with some of the garbage stocks. I call them the garbage stocks. You know what they are: the airlines, the casinos, the hotels, all the weak industries. The garbage stocks outperformed today, at least the airlines. Look at the airlines. Here is American Airlines. There was a sell-off initially, but it caught a bid and it closed in the green. However, we're seeing some divergences here. I'll show you in Wynn Resorts stock. Not all garbage stocks created equal. We've seen the weakness in Las Vegas, and here it is translated in Wynn Resorts. They tried to pop it up a little bit, and by lunchtime, they gave up, and Wynn Resorts closed in the red, along with the rest of Las Vegas casinos. Here is a daily chart of one of my biggest positions in the market, the short triple Q, which shorts the NASDAQ. If you've been following me, you know that I bought this during the reversal of last week. However, I got a shoe in my head on Monday when the NASDAQ rallied. So what did I do instead? I bought more, averaging my entry price down. And now you see the rally in the short triple Q. This position is up about 10% in my portfolio. What about utilities, the safety trade, the yield trade? It caught a little bit in the morning. However, it sold off along with the rest of the market and closed barely in the green. We're seeing weakness in tech. We're seeing weakness in travel. We're seeing weakness in the banks. We're seeing weakness in real estate. We're seeing weakness in utilities. Everything is starting to look weak, with exception, of course, to some dollar-sensitive industries like the consumer defensives, and this is why I entered some of the trades I did today. Let's look at a daily chart of the VIX, one of our favorite indicator. Here it is. It just refuses to go down. It's so stubborn. It doesn't want to crack that blue line. And now we saw a pop of about 7% today in the VIX. Investors are starting to flock into insurance and into protection. The weekly close on the VIX, very important. I said this is my line in the sand. If we close below it, then I'm not going to be bearish in the market anymore. At least I will stop buying the VIX. But here we are. We peak below just a little bit. and we'll see if we close the week in the green. That will formalize a reversal in the VIX, and we'll see more upside in the weeks to come. Here is a chart of the US dollar. The dollar is, of course, the story of the week. It's been trading in the red day after day after day, and we're seeing significant weakness in the US dollar. Of course, that is not surprising considering all the money supply and the liquidity flood from the Federal Reserve, lowering interest rates. The US dollar needs to use this double bottom to bounce and trade in the green in the days to come. Otherwise, all bets are off. Of course, I am making the bet that we will see more downside in the dollar. We might see the initial bounce, but it will continue to sell off. I am bearish on the dollar, and this is why I made some of the trades I made today in buying Chevron in the oil business and buying Fremont McMoran in the metals business, and Mondelez, of course, because they're a global consumer defensive company. I will, of course, explain these moves more in a later video. What about gold? We see gold rallying, of course. Gold surpassed right now the 2012 highs, and it is marching on the way to challenge the 2011 highs. We might see a little retreat here in gold that will correlates with a double bottom in the dollar. The dollar will bounce a little bit to the upside, and gold will go down a little bit, selling off. That would be an opportunity to buy more gold and have bearish bets on the dollar. You can trade the US dollar via the UU up, of course, is one of the proxies for the dollar index. So what do we have to look for tomorrow, the closing of the week? The weekly close is ever so important. We are now at the flat line. We're struggling to break through the resistance. If we close in the red tomorrow, we will have a very similar look that we have seen before during February prior to the market crash. You can see a lot of similarities between the consolidation we're seeing recently and the consolidation we've seen during February before the market crash. The look is eerily similar. We have the initial sell-off. You can see it in both consolidation boxes. A bounce, another sell-off, a bounce, another sell-off. And you can see now the march all the way to try to get out of the box. Here is the march all the way to get out of the box, and the reversal to the downside. Will we see that reversal materialize here? The weekly close, again, very, very important. We need to close in the red for bears, for this market to correct in a significant way. For the bulls, tomorrow, the market needs to close in the green above the resistance line to buy more time and more excuse for a catalyst. This is the nature of the market, the bulls versus the bear, the pull versus the push. This is why we trade, and we will see the market at the end of the day will take its natural course of being technically sound. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.